Things are changing. Gold's at 35, almost 36. It's $3,600 for God's sakes, and nobody's talking about it. I've been doing this for 36 years, almost 35, and I remember when gold finally broke through $400. What a big deal it was. Is that now you have China coming out and saying, and here's another piece. We are going to internationalize our yuan, and by doing so, gold is now immediately convertible. Yuan is now immediately convertible into gold right now without having to switch into dollars. They just made this announcement a few months ago in the Shanghai Metals Exchange.
In today's news recap, China's central bank extends gold buying spree to 10 months. The People's Bank of China increased its gold holdings in August for a 10th month in a continued push to diversify its reserves away from U.S. dollars. Bullion held by the central bank rose by 0.06 million troy ounces to 74.02 million troy ounces last month, according to data released on Sunday. China began this round of gold purchases in November, accumulating a total of 1.22 million troy ounces over the period. Gold has notched record highs in recent days, breaking a months-long holding pattern after bets on U.S. rate cuts and the White House's attacks on the Federal Reserve provided fresh catalysts for its rally. Bullion has climbed more than 30% this year to above $3,500 an ounce, and any damage to the Fed's independence could push it near $5,000, according to Goldman Sachs Group Inc. And globally, the accumulation of gold by central banks has slowed as prices have risen, although geopolitical risks should continue to support demand from the official sector, according to the latest report from the producer-funded World Gold Council. Now, we'll show you the best clips of the latest interviews, but first, smash the subscribe button and turn on notifications so you do not miss out on our recaps. And check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trading the gold-silver ratio and increase your ounces. With this easy-to-read book, you'll know everything you need to know to stack efficiently so you don't have to rely on market commentators. Enjoy the episode.
Is that now you have China coming out and saying, and here's another piece. We are going to internationalize our yuan. And by doing so, gold is now immediately convertible. Yuan is now immediately convertible into gold right now without having to switch into dollars. They just made this announcement a few months ago in the Shanghai Metals Exchange. And you can take delivery in the new facility that just was completed in Hong Kong. So if you are Saudi Arabia, you sell your oil to China for the yuan, you can immediately convert it into gold on the Shanghai Metals Exchange and their new facility in Hong Kong. But gets better than that. The next facility that they are building to expand the infrastructure for settlement is, you guessed it, in Saudi Arabia. It's under construction now. And their intent is to build this multi-jurisdictional system of vaulting throughout the Belt Road, throughout Asia, Africa, and a little bit in Europe to facilitate settlement. So all of these countries that will trade local currencies back and forth, you keep hearing local currencies. They'll trade their local currencies back and forth over the Enbridge network, settle imbalances in gold, and take delivery through multi-jurisdictional vaults. Perhaps they sprinkle gold each country in all of the vaults around the system, and you see vaults springing up in Singapore, in Moscow, in St. Petersburg, in Dubai, the new BRICS facilities that will be built. All of this will be the skeletal system of this new settlement system that they are proposing. Now, we once talked about it as the unit. The unit is what Dilma Rousseff, the former president of Brazil and the head of the BRICS New Development Bank, said they had agreed upon in principle. I believe they have kind of shelved that until Trump is gone. And instead, China's taking the lead and saying it's the process of internationalizing the yuan. Instead of throwing the BRICS common settlement currency in their face, which they've agreed upon in principle, in Trump's face, China's just calling it internationalizing the yuan. But it's the exact same thing. Trade in local currencies, not compatible with SWIFT, settle imbalances in gold. It's virtually the same system that they have in place, that the unit was 60% BRICS plus currencies, 40% gold deliverable upon request through a series of vaults. I would argue that this is exactly what they are doing, setting the stage for them to just slide the unit right in when the time is right. But yes, the BRICS are growing, and to underestimate it is a critical mistake at this juncture, I think.
Silver price news targets $41, $47, and $66 as Fed liquidity sparks bullish momentum. The precious metals market is buzzing with excitement as silver emerges from a prolonged consolidation phase. After months of sideways trading, technical indicators are aligning with macroeconomic tailwinds to create what many analysts are calling a perfect storm for silver bulls. With the Federal Reserve potentially shifting gears and inflation concerns mounting, investors are eyeing silver as both a hedge and a growth opportunity. First target, $41. This breaks silver out of its current range and confirms the bulls are in control. It's not just a number, it's a statement that the consolidation phase is officially over. Second target, $47.6. Here's where things get exciting. This Fibonacci extension level represents serious momentum territory. A push to these levels would grab headlines and pull in momentum traders. Third target, $66. Now we're talking about a completely different silver market. This long-term projection would represent a fundamental repricing of the metal, putting it in rarefied air not seen in over a decade. Dream scenario for metals investors. Everything's lining up for what precious metals enthusiasts have been waiting for. Fed policy pivot, check sticky inflation, check economic uncertainty, check it's like a checklist for precious metals outperformance. Now, smash the subscribe button and turn on notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
No more demand, since there is no more organic demand or a waning organic demand for the U.S. Treasury. Gold will not replace the dollar. Gold will replace what stands behind the dollar, the Treasury. And I think when you look at the price of gold, which has doubled the performance of the 10-year Treasury over the past 25 years, with no counterparty risk, think of sanctioning against the Russian $5 billion in Forex reserves, or in U.S. Treasuries, rather, it's a big deal. It's a very big deal. And, you know, the gold is an asset that is not simultaneously someone else's liability, and it's outperforming the heck out of the bond market. Look at, like, for example, last year, gold was up 40%. The U.S. Treasury was up 4.5%, 10-year. Look at this year. Halfway through the year, that Treasury's up 2.5%, call it. And it's not even quite that much, but let's call it that. The dollar's down 11, so you're negative 8.5%. Gold's up 40% again. So it's a situation where not only is it outperforming, it has no counterparty risk, which is the big deal. And it is acting, I believe, it is acting as the cornerstone to a new system. And you're seeing all of these countries embrace it in lieu of treasuries. I think it's a very big deal. I think it's a big deal for the treasury market, for the dollar, for this new system. And it's one that inspires confidence and trust rather than trusting a insolvent, broke country that is going around throwing sanctions and tariffs upon people or countries. I think much of the world has had it. It's one thing to do that and have your house in order. We are broken. We are insolvent. And after what we've gone through the last 4 years previous to this administration, with lawlessness and open borders and judicial system questioning if it's two-tiered or not, election interference or not, immigration, all of the things that we've seen that I don't need to rehash, the world is tired of it. And instead of extending the olive branch, it's the stick. And when you talk about, you know, should we be doing this with tariffs? Look, being the world reserve currency, Mario, has given us an exorbitant privilege by having the world take our or sell us their products for our dollars, and expecting them to put the reserves in treasuries has kept asset prices in this country high. It has kept goods that we purchase at Walmart low. And you know, this is our standard of living has been really fostered by the good graces of our foreign creditors. And things are changing now. So you got to wonder, this is Triffin's dilemma. If the world takes our dollars that we print out of thin air for the goods that they create with effort and sweat, and then as a result, putting excess reserves in treasuries keeps our standard of living high, our asset prices high, our interest rates low, our goods cheap. Isn't that really the trade-off? And we say it's not fair, but is it really not fair? I think we should be careful what we wish for. And if I had to guess, the days of the dollar being the singular world reserve currency are coming to an end very quickly.
What do you think of Andy's take? Do you agree with him? Will gold reach $4,000 by the end of the year? Is there any top post in the comments section down below your gold and silver price targets for the end of the year, and hype the video if you liked it. Now, watch this video right here because it's a perfect fit for you, and I'll see you stacking on the other side.